Okay, what do we make of these numbers from Columbia Sportswear, the outdoor apparel and footwear company that you know as Columbia, Sorel, Prana, and Mountain Hardwear brands? Now, last night, these guys reported a seemingly mixed quarter with slightly higher than expected sales, but a 9-cent earnings miss off a $1.89 basis. Full year forecast and their guidance for the current quarter also came in light, and that's why the stock got clobbered today, down almost 6%. However, Columbia looks like it's going to return to sales growth this year. So if they deliver, this could be a turnaround story. As the stock just got quite a bit cheaper. It's got a fantastic fortress balance sheet. Let's take a closer look with Tim Boyle. He's the chairman, president, and CEO of Columbia Sportswear. Get a better read on the quarter and what comes next. Mr. Boyle, welcome back to Mad Money.
Thanks, Jim. It's great to be here with you.
Oh, thank you, Tim. Now, I'm going to just quote from what you said about yourself, because I think it's important because you're a man of great integrity. You said, while we made progress in many areas, our 2024 financial performance was short of my personal growth and profitability goals. Can you tell us what would have been something that would have made you happy and not feel like this?
Well, you know, frankly, for me, we've historically been in the high teens, both in the growth area and in operating margins. And frankly, when we're below that, my personal goals are not met. So we have to be a little bit more circumspect about, you know, the fact that at those lofty times, we were a smaller company. It's a bigger time now. But frankly, when we're not operating at a high level in the upper quartile of our competitors, that's a problem for me, especially when you think about the company's balance sheet. You know, it's an embarrassment to me to be talking about an anemic growth pattern when we've got, you know, over $800 million in cash, and we should be doing better. So if we think about historically when we've underperformed in an area, let's call China and Europe underperforming areas from a historical perspective, and we've worked diligently on those areas. We've seen growth, and frankly, we need to be putting the same sort of rigor around our North America business, which at the end of the day is the one remaining geography where we aren't performing as high as we need to. And so we've bundled a number of issues and strategies together in what we call Accelerate. And we're just going to be spending an incredible amount of time and effort on our North American business to get us back to growth.
Well, Tim, what gives me hope here is that I'm a big retail guy, and my parents were in retail, and all I ever think about when it drummed in my head was inventory. Inventory is the bane of your existence, excess inventory. It looks like to me that is not your problem.
No, we've been working diligently to work our inventories down, which got bloated during COVID. And frankly, we spent arguably too much time because we concentrated on profitably liquidating those inventories, which had a dampening effect on the whole business. But we were able to successfully move the inventories down. We again had a down quarter in terms of our inventory perspective in Q4. And we think we can operate the business even with less inventories than we ended with at the end of the year. It's going to require diligence, and we're capable of doing that, fully capable, but it has to be a focus, and that's where we're going to be spending our time and effort, accelerating the business and lowering the inventories.
Right. Now, you mentioned brick and mortar, but you also mentioned that you had these, I guess, almost like pop-up stores. I'm not sure to get rid of the inventory, but brick and mortar in high traffic areas. What is a high traffic area for Columbia Sportswear?
Well, I would say in some of the best malls in the United States and in Canada, where there's very high traffic, where we can have 8 or 9 million people in a particular mall, and we get great positioning, and that's going to be part and parcel really of our marketing efforts, because we expect that those kinds of traffic figures will allow us to show off some of our technologies, which are complex and require an explanation, and also our footwear business, which we believe we had very high quality footwear and great products with great technologies, but it's tough to get adopted in the kind of way we would like it at our wholesale partners.
Well,
we're going to.
Well, it's interesting you say that. I've got your footwear, and it's very warm on really, really cold days, but doesn't look like they're not cloddy. But I had to learn about it. I mean, you can't, I had to learn about it because of the show. I wouldn't just buy it without learning about it. That's kind of a problem.
I agree. In fact, you're not the only one who's been critical of our efforts in marketing. So that's part and parcel of what we will do. We'll have these stores, which will have a minimal impact on the population. Where we're going to be spending more time and, frankly, more money will be in our .com business and marketing efforts, as well as talking about with TV ads and a larger, more mass media budget.
Oh,
so
terrific.
We're going to be putting, it's going to be important, and we need to be thinking bigger about how we talk about our products.
I totally agree. Now, you are a bit of an anomaly. Your business in China is very strong, and your business in North America isn't that strong. Plus, you're one of the most outspoken people about tariffs, where you recognize that tariffs are not a way necessarily to do business. Now, since you straddle both countries, and since you're doing very well in China, again, an anomaly, why don't you give us a view of why, one, that you're doing well there, and two, about how it doesn't help if you tariff them?
Well, as you know, tariffs are designed to raise the price of imported products. And so Colombia is one of the largest duty payers in the United States. And the reason that's true is that we are in a commodity, footwear and apparel, that's very highly tariffed already. Call it in the mid-teens area in terms of import duties, but some of our products carry 37.5% duty, so they're very high. It's a dampening effect, but more importantly, we need some surety about what is going to happen. What's the future? We import very little into the U.S. from China. China is an important part of our business, where we produce products in China for distribution in China and distribution in other parts of the world. But we have to be incredibly cautious, in my opinion, about how we go forward, because we don't know where these tariffs are going to appear and frankly, how much they're going to be. And
it doesn't seem like that it's going to bring back the seamstress business, the textile business. Those are long gone. We're not going to restart, right, Tim?
No, in fact, it's interesting. When we have a factory in Asia, forget the particular jurisdiction, but if we have a factory in Asia making either footwear or apparel, and an electronics factory opens up next door, everybody rushes away from the textile products into the digital environment. It's just a more highly sought after environment. So, yeah, it's a challenge, and it's one that we're frankly very good at navigating, but we need some surety about what's going to happen so we can plan.
Well, I sure wish people would talk to you, because they would understand better than anyone, because you actually have lived it and breathed it. I want to thank Tim Boyle, Chairman, President, CEO of Columbia Sportswear. You heard that the inventories are down. You heard they're going to do campaigns. The stock is down a lot, a fortress balance sheet. I think this stock is very interesting here. Thank you so much, Tim.
Thanks, Jim. Great talking to you.
Mad Money's back in for the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.